Hey guys, welcome back. In this particular video, we are going to talk about capital and revenue expenditure. Okay, so we will discuss the basic differences between capital expenditure and revenue expenditure. And along with this, we will also talk about the accounting procedure for capital and revenue expenditure. Okay, whenever you talk about the expenditure in any organization, we have two type of major expenditure, or you can say the all the expenditure of any company. You can divide it among two part. One is capital, which is generally for long term prospect, which is generally spent on the plant, the machinery or the equipments, and another one is revenue expenditure, which is generally short term in nature. Okay, so for the day to day functioning of any organization, we generally do some expenses that is generally part of your revenue expenditure. Okay, so in this particular video we will discuss these particular thing in detail, and even we will talk about the differences and the accounting for capital as well as revenue expenditure. Okay, so first, as I earlier mentioned, capital expenditure, which is generally for long term in nature, and this is expenditure on PPE, that is plant or the other equipments, machinery, and all. So for the procurements of these particular things, and we have a long term vision with these particular purchase, okay, or with this particular purchase. Let's say if you buy a machinery, so you'll use that particular machinery over the period for 5 years, for 10 years, 15 years. So these expenditures are generally part of the asset side of the balance sheet. Okay, so if you talk about the examples, like we have purchase of machinery, or like if you buy a machinery, so any equipments in any company, so purchase cost or the transportation cost, installation cost, testing cost, so these all are generally part of your capital expenditure for that particular machinery. Okay, so the expenditure that is incurred by an organization for long term benefits are known as capital expenditure. These expenditure are added on asset side of the balance sheet. It is done mostly on asset like land, purchase of land, equipments, furnishing or vehicle that help to drive the benefit of organization by increasing the operating capability. So let's say if you are running some organization, or let's say if you're planning for some startup, so you will have two type of expenditure. One is your fixed expenditure, capital expenditure. So capital expenditure is generally known for expenditure for long term duration, and we have outcome for more than one year. Okay, so you buy, let's say you are planning to start a delivery services, or we can say any transportation services. So for that one you need cars or trucks and all, so you will use these particular car for long term duration, so that is your capital expenditure. To run those particular track you need drivers, so that is your revenue expenditure. Hope with this particular example you get an idea about the capital expenditure. So it is an amount spent acquire or to improve the capability or capacity of long-term asset, such as like plant, machinery, equipments, and others. So it include purchase cost. Let's say for that particular transportation business, you buy a truck, and this particular truck was like the purchase cost was supposed that 20 lakhs. Okay, the delivery cost. Okay, so the outlet to your company outlet delivery cost, suppose that it was 50,000, and legal charges, taxes and all, registration and all, suppose that it is 10,000. Installation, okay, in case of truck we don't have any installation charges. Okay, upgradation charges we don't have. Replacement after, like, let's say the age of this particular truck is 20 years, so after 20 years you have to replace this one. So every year you have to create a provision account for this particular one. Okay, so let's say it is 1 lakh rupees. So this all that generally comes under, or these kind of expenses, they are generally part of your capital expenditure. Okay, so capital expenditure are expenditure on creation of permanent assets. Okay, these are long term in nature, and These are kind of one-time investment or one-time payouts for the company most of time, and that's why they are generally part of your asset side in your balance sheet. Capital expenditure, they can further classified into two part. One is initial cost. Okay, so initial cost is like when you purchase that particular asset. So there are so many costs which are generally involved in that particular thing. And second one is subsequent cost, like after the purchase of that particular asset. So there are some, like let's say for the maintenance or some other expenses which are generally involved for the maintenance of that particular equipments or machinery. So that is part of your subsequent cost. Okay, so initial cost, these include purchase price, including duties or non-refundable taxes, cost directly attributable to bringing the asset to the location, and conditions necessary to for the operational, which means the transportation, the warehousing, or the taxes, or the test run. So all these are generally part of your initial cost. But if you talk about the subsequent cost, these are like after 1 year, for the maintenance you change some motor or some other equipments in that particular machinery. So that is part of your subsequent cost. Okay, so these include cost of part, some items of the asset requirement for replacement, as I gave you an example of motor and others. An expenditure that occur after the acquisition or initial recognition on of the item. Okay, so in case of initial cost, everything like when you buy that particular truck, so you buy that particular truck, or you paid taxes, that transportation, or the warehousing, or the other things, the test run or everything, that is generally part of your initial cost. After some time, let's say one tire burst, so you'll acquire the new tire, so that will be part of your subsequent cost. Okay, so this is the slight difference between initial and subsequent cost. Okay, so capital expenditure, I hope this is clear to all of you. Now next one, we have a revenue expenditure. So as I earlier gave you an example, let's say you are planning to start a startup. Okay, so you'll have to, like, your startup is a transportation business, so you'll have one is capital expenditure for the overall startup money, let's say for plant, for land, for this truck, and all these kind of expenditure are generally part of your capital expenditure. But now if you talk about the revenue expenditure, these are short-term expenditure, or like we can say their outcome is only annual basis. That's why we manage them with the financial statement. Okay, so let's say to run this particular truck we need driver, we need petrol, diesel, these kind of things, or for office running we need some person, so wages and all. So these all are generally part of your revenue expenditure. Okay, so revenue expenditure, they are generally short term in nature. Hope this is clear. So revenue expenditure is referred to the expenditure incurred by an organization to manage the day-to-day functioning of the business. Like these are like wages, inventory, rent, electricity, insurance charges, stationery charges, postage charges, taxes, and all. So these are the major example of the revenue expenditure. Okay, so this is very simple one. You can take an example of that startup as well. So first you need few things which are generally part of capital expenditure or long term in nature, and another one is to run that particular business or the operationality of that particular business. We need something, we have to spend something, so that is generally part of your revenue expenditure. So revenue expenditure is the sum of the expenses that the business incur in the production of goods and services, which help for the revenue generation of the company in the accounting period. So their age is limited to a accounting period. Let's say you hire 5 employees, so you have to pay these particular employees on monthly basis or daily basis. Okay, so their limitation is accounting period only. But that machinery which you purchased 5 year back, and you are using that particular machinery for 15 years, so that is the long term approach. And here we have the activities are generally, we can say, limited to a particular accounting period only. Okay, so hope this is clear to all of you. Now there is one another term which is called Deferred revenue expenditure. This is very important one. So many times examiner they generally ask question based on deferred expenditure or revenue expenditure. So if you talk about the deferred revenue expenditure, these are the expenditure in accounting period, but their benefit are for 2 to 3 years. Okay, I'll give you an example. It will give you more clarity. Let's say you running that particular transportation business. Okay, so you did some advertisement, okay, through you did some marketing activities through online media or through newspaper and all. So the impact of that particular marketing is definitely going to help you over the period for 1 year, 2 year, 3 years. So that kind of expenses, so expenses that happen in a financial year or accounting period, but the benefit is generally obtained for 2 to 3 years. Like in case of capital expenditure, you acquire that particular machinery, and the benefit is for 5 year, 10 year, or long term. In case of revenue expenditure that happen in accounting period, and benefit also we get in accounting period only. But in case of deferred revenue expenditure that happen in accounting period, but benefit are for 2 to 3 years. Okay, so is an expense which is occurred while accounting period, and the result and the benefit of this expenditure obtained over the multiple years in the future. So as I gave you an example of advertisement or marketing activities, so or even for your goodwill creation you did some activities. So these are the activities which generally you made an expense in an accounting period, but the benefit is generally for 2 3 years, or you'll get that particular benefit over the period as well. Okay, so hope this is clear, and this is very important one. Hope you get this particular point clearly. Now next thing we are going to discuss, that is the differences between revenue and capital expenditure. I hope as of now you get this particular thing clearly. Okay, so even you can also differentiate the differences between these two, okay, capital and revenue expenditure. So we have so many differences, like the age of that particular expense. Like capital is part of asset side, it is for long term, and revenue is generally for short term. Okay, capital expenditure examples are like the, we can say, the procurements of machinery or any other equipments. Okay, but if you talk about the revenue expenditure, so it is generally for the day-to-day functioning of any organization. So we did some expenses, so that is generally part of that particular one. Okay, so like purpose, if you talk about the first one, purpose. So capital expenditure is incurred to acquire, expend, or maintain the capital fixed asset for of a firm, whereas revenue is generally for the earning capacity of that particular firm or the functionality of that particular firm. Okay, duration, it is capital is generally for long term duration. Okay, and if you talk about the revenue, it generally incurred for short term. Okay, for accounting period only. But in case of capital expenditure, they are generally for long term. That's why they are generally part of your asset side in your balance sheet. Then we have occurrence. If you talk about the occurrence in nature, so capital, they are once, we can say, and or non-occurrence in the non-recurring in the nature. But if you talk about the revenue, they are they have recurring these are generally recurring expenditures. Like every month you have to pay salary, every year you have to pay insurance premium. Okay, every month you have to pay electricity bill. So these are recurring in nature. Okay, but if you talk about the capital expenditure, you buy that particular truck for the transportation things. Now you'll have for 15 years, 20 years, whatever the life of that particular asset. Okay, apart from that, depreciation. So depreciation is generally charged on capital assets. Okay, like while we discuss that depreciation wala unit, so we already discussed this particular thing. Okay, so let's say you buy a 15 lakh the machineries up, that truck purchase price was 15 lakh rupees, and let's say the age is 10 years, and the salvage value is 5 lakh. So you have 10 lakh divided by 10 if you go with the straight line method. So every month you have to make a provision of 1 lakh rupees depreciation, and which will be debited from your profit and loss account, and it will credited to your provision account for the for this depreciation. Okay, so depreciation is generally charged on these capital asset, but it is not on the revenue asset. Okay, addition of value. Okay, so capital expenditure add value to the existing asset, whereas revenue expenditure, they do not result in any value addition. Like if the salary is 50,000, it will remain 50,000. Okay, or but in case of the capital asset, they can, like, their value can be increased or decreased. Accounting treatment. Okay, so accounting treatment, this is a very important one. Okay, as I earlier discussed, you capital expenditure appear in the cash flow statement of the company. So they are generally part of fixed asset and they are part of balance sheet as well. Whereas revenue expenditure, they are generally part of your income statements. Okay, and not appear in the balance sheet. So because we are using them for the overall income and expenditure part, so they are generally part of income statement, not part of the balance sheet. But if you talk about the capital expenditure, they are part of your balance sheet and they comes under asset side of that particular company. Okay. So guys, in this particular video, we generally talk about the basic differences between capital and revenue expenditure. I hope you get these particular thing clearly. And this is a very simple or very common topic. Okay. So whenever we talk about capital expenditure, when you read fiscal policy or budget, same like there as well, we have same meaning, like capital expenditure, expenditure for long term. And like when government, they generally borrow money and they lend for, they construct road or dams and all. So similarly here as well in accountancy, so capital expenditure, they are generally expenditure for long term and they are expenditure on the procurement of fixed asset like machinery or the other equipments in any company like land and all. Okay, so and revenue is generally for the day-to-day functionality of any organization. So let's say if you are planning, like as I gave you an example of that transport company. So in that particular transport company, when you start that one, you need some trucks, you need a place where you can, from where you can operate that particular business. So these all kind of expenses are generally part of your capital. And revenue, to run that particular business, you need some employees, like you have to pay the electricity bill or the other office expenses. That is generally part of your revenue. The only thing is you need to remember, let's say if you buy a truck, so purchase cost plus transportation cost plus taxes or plus the test run, these all are generally part of your capital. Okay, so do remember these particular things because these are very small entries and you need a proper clarity about these particular things, so then you can make a right entry in your while you post these particular entries. Okay, so hope you enjoy the video. If you like, please do share with your friends, and if you're new to my channel, please do subscribe so we can increase our reach. Okay, so this is it for from my side, guys. Thank you for watching this video. Bye bye, take care all, have a nice day.